Hello everybody, I'm Giuseppe Basili, also known as the FibStalker. Welcome to this part 2 of today's weekend video review. Today is May 86, 2018, and this video is part of the FibStalker analysis and trading service. As usual, if it's the first time you are watching these videos, and in any case, I suggest you stop and pause your video here and read and accept the usual disclaimer that you find here, right? So welcome back, and what we're going to do now, we're going to review the majors here and the futures. We'll start from the futures, from the SP 500, which you see here on the screen. So we had this 4 months now, almost for 3 months and a half of lateral move here. I don't think that the move higher has ended. This market could resume its move higher and maybe even test previous size. And however, in this market we know that we are in sideways conditions. The last test of shorts at 27.10 was successful. The bulls have not held this price, but between Thursday and Friday here we saw a kind of double bottom here, loose double bottom actually forming here. And although the the algorithms here are kind of not yet aligned to this market, it seems that there has been buying here, and this could also coincide to the first week, the first the first few days, the new month inflow of money coming into the market, and that could be one of the reasons we're seeing this strong moves without structure here, such money just coming into the markets as it is made available by new investments at the beginning of the month. So for now, what I'm looking for in this market is first a retest of 27.10 and then see whether we are going to continue higher here. If we review the markets, the historical behavior of markets in the last 30 years and even before, we know that this market, they just don't start their move lower if this is the start of move lower like that. I mean, we typically see a long distribution period that requires sometimes months, sometimes years to take place. So we'll see what happens here. Historically, this market could retest previous highs, and only after that we could see some further selling. So that's what I'm looking for. So for now, after this market has been printing here basically a double bottom here, if we consider the price action of the last few months here, and with this strong move higher here, it is possible for this market to just continue higher here into into the different ranges and support and now resistance level that we're seeing within this long range. So we really don't have an edge here unless we pick a side. This is a range. If the market comes back here, we could see a full 50%, but with this strength that we saw here, we could just see this market continuing higher. Another possibility is an extension short if that happens, and I'm going to use this previous highs here, two highs. If this market trades into 26.53, we could see a potential participation and continuation higher. All right, so dollar index had strong month here of April, and basically we had 3 strong weeks of move higher here. When we look at this market technically, those two highs has not participated, initially participated, then not participated, and then it was participated mid of April here, and that gives us you know, a potential level to consider for a retrace. If this market kind of retraces a little bit here, trading now the congestion that we saw, you know, in the month October to December here. So if this market does not continue higher here, it's possibly going to pause and see whether it will have strength to continue higher into the 95 level. For that to happen, you know, this market has to retrace mildly here in the coming days into the 91.60. And let's review the US dollar, Singapore dollar to see whether, you know, this is you know, they are actually giving the same pictures. And you know, we are seeing you know, we are seeing the same pattern here, of course, in the US dollar, Singapore dollar here, and this market has printed higher highs here on the weekly, so lower, higher lows and higher highs. You know, is the Dow definition of a new trend. And you remember that we have, I mean, I've indicated here two levels. The first one is just a continuation of this sequence of measured moves. So 1, 2, and you know, and we have to make the case that the first target was it though. So we can trace this one, but this one is not, you know, it's not a valid trace. The other trace wouldn't be a valid trace because the trend has failed. The other, it's a little bit above that one, and it did not come into play. That's the 132.83. all right. And if this market uses this market you know, goes and prints a deeper retrace, that is going to use the you know, the notable anchor here. This is one of the notable anchors we have, which is not very common but could come into play. So generally, you know, we are seeing some sort of retrace here, and we're gonna see how deep this retrace it's going to be. Okay, worst case scenario, we could see a full 50% here from lows to highs. Okay, and also this, I mean, we cannot rule out at this stage any of these scenarios, because we know very well that when market retraces, then the moves can be very, very jagged. However, so far, you know, this market has tried to move higher, double top there, which we can see on the 4-hour time frame, and it's now coming back. So you know, we should expect or anticipate some strength in the other major that trade against the US dollar, and some weakness in the market that trade with the US dollar. So we're going to look at those. Before we do that, let's also look at gold and silver. So gold, as we mentioned a number of times in the past, the line in the sand there, it's 1296, and the level 1311 that has been tested in the past is also obviously holding here. As you can see, on Friday, gold has been holding on top of this level. Now, this is a big range here, and you know, we know that in ranges 50% level do not hold. This market, in fact, for the first time after, you know, many weeks here, it has dipped well below the previous low that was printed. So in case we see a continuation higher in the dollar index, that the next level for gold is going to be 1263. So I don't believe that gold at this juncture is going to continue higher, but that's just based on technical consideration here on the levels. And silver, which has been relatively weaker here with relation to dollar, has moved lower and also has printed lower lows, but not enough to bring price into the first target of 1580. that we have from the 50% here that has been holding in the past, and then we had that bull trap here, and now the market came down back down below the 16,970 level, 17 level. Okay, so of course, if the dollar index is going to be weak in the coming few days or even weeks, then this market could retest the 17 level in the coming weeks, and we saw even a gap here in the open today, which is showing showing strength in this market. The New Zealand dollar US dollar is a market that has traded shorts, as you will remember here, and that happened last in 2017, not even last year. This is a monthly chart, and as it happened in the past, it is possible for this market, after the strong selling here, as we saw in the past also, this market can actually kind of move higher and recover pretty quickly, and it could go and trade the next measure. Now, one level I've indicated here, there are many levels that could come into play, and one level, it's a notable here. We also have another potential notable below if this market retraces more mildly here. So there are two levels, 70.93 and 17.120. These are the two levels who come into play, and then if the move in the dollar index resumes, this move lower could also resume here. This is a range, so we anticipate medium long term, sorry, intermediate term here. I'm looking for a retest of 68.50 level. Okay, so we may see some strength in this market this week, driven by weakness in the dollar, and the same applies to the Australian US dollar. The only difference here is that what has not happened last year, a test of that 50%, it's the 74.81 has happened now this year. And you remember I've been mentioning this now for many weeks, that we could see the 74.80 retested here, and that's what happened. So of course, weakness in the dollar, and if the participation in this 50%, it's kind of now helping pushing this price higher. This market has been very technical with a sequence of measured moves. The highs to lows here, 61% levels defended, first target hit, next measured move came into play, highs to lows, and went into the first and second target. The aggressive move here, which we can also use to time, has found participation, but not capable of stopping price there. So if this market comes above the 75.78, we could see two levels come into play, the full 50%, we can never rule that out, as well as the next measure move, canonical measure move. So we would see a move into at least 76.40 in this market. Okay, and the violation of the 75.78 on the upside would be a confirmation that this market could indeed see higher prices. Euro dollar also seen a lot of strong selling here out of this 50% short, 21.66, and that's the next measure move short in the euro. So clearly the euro is not doesn't look like to be in a good shape here. The sequence of measured moves as held here. This is the measure move on 2014, and now this is the measure move lower on 2018. So clearly, in the last 8 to 10 years here, this market has been moving lower, and which would suggest that the dollar index could actually at least partially recover higher. Obviously, You know, the Fed has started raising interest rate. We don't know how long that can go, and we will see. But obviously, if the euro area cannot match, and so far has not been doing that, any increases in interest rates, then we're likely to see relatively weaker dollar here. Okay, now that said, when we look at this market has not been technical lately, but when we look at the this move here, although busted, actually is capable of bringing price into first and potentially 1907, even the second target. That low was 1909, so we will consider that second target hit, which means that one of the levels we need to watch is a potential test of the 2033. Okay, the 2033 would be one level to watch, and if the dollar index resumes higher, then this market is going to resume lower, and this trace here gives us targets below, as you can see. The 1853 and the 1760 are two levels to watch here for the euro dollar. Pound has also been very weak here, probably even weaker than other markets. Now we have a level here which is an odd level, but it's apparently it's coming into play here, and it's reusing an old anchor, although this is not a technical trace, meaning it does not follow our rules, and I'm placing it here only after the fact to show the level where this market is retracing. Okay, so you know, this market also has different levels where it could retrace, and one of the two levels is this one. The second one is a daily level, extension lows to whatever new lows were printed. So two levels to watch are the 137 and the 137.40. These are the levels where we could see a reversal and a continuation lower. US dollar Swiss franc here, after this huge and strong run up higher, could have started here following, of course, what's happening in the dollar as well, a correction here. Now we'll need to see whether the next measured move is going to come from one of these jumping extensions, or you know, is going to follow rules here and it's going to come from the highs of these extensions that actually, you know, kept pushing price higher and higher. So if that's the case, the high here 96.46 to highs should give us a potential area of participation around the 98.33, and that could be the area where this market is going to test for additional participation. This is a big range as well, let's never forget that in any case. So as this market go up, they also can come down, and you know, if you look at this at the price of this market, it can erupt very quickly and then, you know, it moves as quickly lower. We see that a lot whenever there is a strong run up. The move lower does not come as a reversal right away. There is often some sort of retest of highs, and we will see whether, you know, in this case this market is going to come back into a valid 50% level and will try to move higher. Okay, so it all depends, well, mainly from what the dollar index is going to do. US dollar Canadian dollar here has failed the daily shorts and has not traded the weekly shorts yet. This is the failure of the daily shorts here a number of times. It does not mean that it cannot come lower here from this level, but obviously a test of the 50% short 129.30 would actually be a safer play here for a continuation lower. US dollar Japanese yen is also is also moving lower, and is doing that after reaching the 50% here on the weekly. And let me use this, and I'm gonna remove the dump money here, and I wanted to show here the 50% from highs to lows that traded the 109.68, and there is an extension that it's coming into place, being defended here, and if this is defended, this is the level, the next level where this market could come, could continue higher. Okay, if that level is not defended though, we also have the actual 50% in here, and the highs to highs could be the next level that we would test. Okay, so here also we have two levels, the 108.50 and 108.90. These are the two areas that can come into place. You can see here when we look at the 4 hour here, it seems that the that closer extension here, which has come into play, is actually holding price here, and there's some sort of double bottom here showing convinced participation, at least so far. So we will see if this continues. Okay, so this is an area that you want to watch. And we reviewed the US dollar Singapore dollar as well, that we use sometimes a proxy of the dollar. As you can see here, this market has traded a 50% short, and it has all the right to correct here also, especially also after this big run up here. Okay, so we could see some more weakness at least at the beginning of the week here, and then we will know whether the dollar index is going to reverse and basically eat back all the gains that were accumulated in the last month, or if you're gonna see another run up higher. And it seems that after this strong move higher, the possibility of a continuation higher is there. Okay, so we will see, and if you have any questions, I'll see you in the room, and happy trading and happy trading week, and you have a great day and week. Bye bye now.